Hello investors. It's been another good month for your portfolio. So back to back, we've had 2 good months, and this really reflects, the thought process that it's very important to be in the market, because trying to time the up move is always fraught with danger. You can have 10 average months, and in 2 months you can actually catch up and do the big returns for the year. So we've had 2 such years, and your portfolios have done very well. And this month has been really satisfying on another account. And that, I think, is the fact that the market breadth has improved. For the last 2 years, the market performance has been captured by 50 stocks. That's where we are also hiding, and I think that's where we've been able to outperform. But in this month, what I saw was that the number of stocks and sectors that participated broadened. For example, sectors like autos, for example, sectors like PSU banks, real estates. These are absolutely beaten down sectors, and they have also started doing a base formation. And this broadening of market breadth is very important for the long-term bull market, which is when we will actually really make the big money. So this, I think, is very positive. And what it also does is that it creates a base for the index. See, negative news, nobody can anticipate. Even if it comes, if the market breadth is broad, you will not see a major collapse in the market. For any bull market to be sustainable and long-term, market breadth is important. This has been eluding us for the last few years, but this is the first month where I'm seeing early signs of that, and gives me confidence that going ahead, we are doing a base building for a larger bull market. The second very important thing, especially from your portfolio point of view, is the corporate numbers. The numbers that came out were much better than as expected from most of your portfolio stocks. And this is again something very intrinsic to our philosophy, because whatever the market does or whatever momentum does, we need the backbone of good numbers, and most stocks in your portfolio have delivered good numbers. You are seeing a short covering rally, you are seeing a lot of small penny stocks going up, and sometimes you feel like, oh, you want to really get into the action. But we do not really fall, victim to these kind of short-term temptations, because what is very important for you and your portfolio, from our point of view, is to have companies that deliver good numbers, because that is where there is safety of capital. So we are very okay to have, short-term underperformance or compromise in the short term to avoid this kind of volatility in such stocks. So we are invested. Your portfolio is intact, the company numbers that are coming out is very good, and they are trending very well. So we feel very confident and solid. That is why you will find that there's not much portfolio churn, or we're not buying or selling, because the stocks that we are in, I have a feeling that they are set, or they are going to be the backbone of the oncoming bull market. Why I feel so confident about Indian markets is that it's not just about India, it is what is happening globally. The S&P 500, which is the mother index of US markets, has touched a lifetime high. The dollar, which is very weak, and this really helps in the performance of emerging markets. FII numbers, which have been negative and severely negative for the last 2 years, have turned positive. So I have a feeling that if you start seeing this kind of sustainable bull market globally, the wall of money or FII flows in India would accelerate, and I think this will be very important. In India, we do have our own problems, we do have distress. But when the markets start taking off, you'll find that a lot of these other companies like Yes Bank, or maybe what's happening with the RBL Bank, or what you're having with Diwan Housing, and so many other Z, etc. A lot of these issues get solved automatically when the market improves. Because when the market improves, these companies are able to raise capital. So even the corporate distress that you see can very often get sort of resolved thanks to good markets. And this comes directly from what George Soros has said and spoken about in his theory of reflexivity, is something that we really believe in how we see markets. So all in all, I would say it's a good market. We are in cruise control mode. As I'd say, we are in riding the trend mode. Your portfolio is fully invested. As I'd urged you last month, that this is a good time to allocate towards equities. We feel that going ahead, the big driver is going to be global markets, hopefully emerging market flows. And as and when corporate India turns around, I think the pace can be accelerated. So we are completely focused on your portfolio. We feel that our companies that are a part of your portfolio have come out with good numbers, and we are riding the trend. So keep the confidence. I feel that it's a great time to allocate to equity. But just one thing, be very careful of getting into all those small, tiny bit beaten down names, which really go up 20% and you feel like, you want to be in them. But if there is no corporate numbers, or if they do not have the backing of good fundamentals, avoid the temptation. It's better to underperform for the short term and avoid the big pitfalls of taking on a very risky portfolio. With that, I leave you for this month. As I said, continue to ride the trend. Thank you.